When we look back and right now, April silver, or May silver is like close to $35 here. Are we going to look back and say, well, it was Vladimir Putin bringing silver into his precious, the Russian central bank's precious metal basket? Was it that? Was it Trump's tariffs and the LBMA inventories going down over 8% in the month of January alone, right? Like, what are we going to point to? And I think the other way to look at this is, is it happening? Like, are we in the midst of it right now? And in terms of the triggering to the many magnitudes, like, I guess, maybe the way to look at it is, what's going to cause triple digit silver?
Silver's impressive 18% surge in 2024 has sparked significant interest among investors, outpacing gold's more modest gains. This rise was fueled by inflationary pressures and increasing industrial demand, particularly in renewable energy applications. Silver's dual nature, serving both investment and industrial purposes, gives it a unique advantage in volatile markets. However, as Shawn Khunkhun points out, strategic risk management is essential to navigating silver's price fluctuations and avoiding unnecessary losses. There are two key drivers behind silver's strong market performance. First, industrial demand continues to grow, with silver being a critical component in solar panels, electronics, and electric vehicle manufacturing. Unlike gold, which primarily serves investment and jewelry purposes, silver's industrial applications provide an additional layer of demand. Second, macroeconomic trends also play a crucial role. Although both metals are traditional hedges against inflation, silver tends to experience sharper price swings in times of economic uncertainty. For instance, during the COVID-19 crisis, silver plummeted by 20% while gold maintained a modest 5.1% gain. Shawn Khunkhun notes that this historical precedent underscores the importance of monitoring economic indicators when investing in silver. Looking ahead to 2025, silver is expected to continue its upward trajectory, with some analysts predicting it could reach $40 per ounce. Limited supply, coupled with rising industrial demand, positions silver as a lucrative investment opportunity. Additionally, silver remains more sensitive to economic downturns compared to gold. Should a recession occur, silver prices could decline more sharply, reinforcing the need for a balanced approach to investment. Now, let's take a look at Shawn's insights from his recent interview. Before we continue, please subscribe to our channel and activate the bell icon to stay updated with our latest content.
I think that in the past, where precious metals, you're asking specifically about silver, but before we specifically go there, I want to start with precious, because despite record high gold prices, that's occurred at a time where other asset classes are still performing quite well. And so I think if you study the precious metals bull markets of the past, what you'll see is you really want to see that sector rotation. Right now, are we in the beginning innings of a gold to S&P breakout? Right? Or are we starting to see that? And so I want to start with the idea that let's celebrate how well both gold and silver have done, despite the strength of everything else, the everything bubble that we've competed against. Why are gold and silver doing so well in an environment where, a lot of the historical evidence that it would say gold and silver should be down when you have all the other factors that exist in the world today? So I think let's start there. And then as we look at, well, when's silver really going to get going? Historically, that's been on the back of a sector rotation. That's been on the back of other markets not moving up as fast or even declining. I've got some friends who have done extremely well in previous cycles, and some of them are in, some of them are all in, but some of them are actually on the sidelines going, we're waiting for a crash. We'll buy this market because every other time in history, particularly with silver gets going on the back of a crash. And then it does fantastically well. Because there's a fear that if there is a nasty correction, or heaven forbid a crash, that silver's going to get hurt, and so is gold. But my argument is, When I look back at, say, the last major, longer crash that we've had in recent history, it would be 2008. Particularly precious metals and precious metals equities had moved up a lot, from the early part of 2000. If you go back and look at companies like, I don't know, Barrick, okay? Barrick was like over $50 a share, right? And my point here is Barrick had room to crash, is elevated. So was the price of gold. The price of gold had gone from 200 to 1,000. It was up 5 times. My argument today is particularly with silver. Silver is trading below its historic nominal highs, not even factoring in inflation. And silver equities and precious metals equities at large, commodity as equities at large, have drastically underperformed. So I feel like even if there is a crash, I don't think this sector gets hurt. I just take what the market gives me. And what the market's giving me right now is a clear sign that we are in a gold bull market, no question. And I have time right now to continue to add to silver because the ratio is above the 80-1.
Investors, considering silver over gold, must carefully evaluate both assets in terms of liquidity, volatility, and portfolio diversification. While gold remains a more liquid and stable asset, silver's growing institutional interest is narrowing this gap. Silver's price swings present potential profit opportunities for active traders, but its volatility requires disciplined risk management. Shawn Khunkhun emphasizes that silver serves as both an inflation hedge and a strategic industrial asset, with platforms like OctaTrader offering contracts for difference, CFDs, on both silver and gold. Trading activity for silver remains strong, particularly as market conditions shift following Donald Trump's election win. According to market analysts, silver's high demand on OctaTrader has increased liquidity, providing traders with more opportunities to capitalize on price movements. Shawn Khunkhun advises investors to remain cautious but acknowledges the potential for significant gains in silver amid its current momentum. As 2025 unfolds, silver's strength in industrial applications, particularly in renewable energy and solar panels, will likely drive sustained demand. While volatility remains a factor, Shawn Khunkhun suggests that strategic investments in silver could yield higher returns than gold in the near future. For traders and investors willing to navigate its price fluctuations, silver presents a promising opportunity within the evolving financial landscape.
Well, specifically the many orders of magnitude in terms of rise, I think it depends on how severe the supply crisis becomes, right? And so, that rising industrial demand, the stagnant mine supply, the declining above ground inventories, and the paper versus the physical market, and that the difference there. I guess what you're really asking is, what's the trigger point? And look, I think it's all of the above. And I think, and I agree with Ed Steer, and I follow his work, and anytime there's an opportunity to hear his take on things, I think for everything that we've laid out, that and why we've seen the price move the way we have. But it's a question of, in order to get the many magnitudes, it's a question of what's the trigger point. And the difficult thing I think we all find is, like, if we take gold as an example, gold was range bound for a number of years. And that, and the range that I'm referring to was a range that it was in from 2013 to 2019. So gold was in this after rising from, call it 200 to 2000. It spent 6 years in a range. 1,000 on the low, 1,300 on the high. What was the trigger that sent gold through 1,350 in the spring of 2019? What was the trigger? Was it central banks buying? Was it dwindling mine supply? Was it gold being the idea of it becoming a tier one asset? Like, what was the trigger point? When we look back and right now, April silver, May silver is like close to $35 here. Are we going to look back and say, well, it was Vladimir Putin bringing silver into his precious, the Russian central bank's precious metal basket? Was it that? Was it Trump's tariffs and the LBMA inventories going down over 8%? And I think the other way to look at this is, is it happening? Like, are we in the midst of it right now? And in terms of the triggering to the many magnitudes, like, I guess, maybe the way to look at it is, what's going to cause triple digit silver? And I think everything that we've outlined here all are going to play into a steady, consistent, stable, sustained rise in the silver price.
As 2025 unfolds, silver's strength in industrial applications, particularly in renewable energy and solar panels, will likely drive sustained demand. While volatility remains a factor, Shawn Khunkhun suggests that strategic investments in silver could yield higher returns than gold in the near future. For traders and investors willing to navigate its price fluctuations, silver presents a promising opportunity within the evolving financial landscape. Share your insights in the comments section below. If you found this message compelling and enjoyed the video, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thanks for watching.